Welcome to the RANsquawk CU morning briefing for Wednesday the 17th of June 2009. We've just gone through 8:30 now in London. Quick check round the markets. At the moment seeing equity markets marginally lower following some of the dip that we saw on Wall Street at the close yesterday. In terms of the news-wise, it has been very much dominated about regulation both in the UK and very much across the globe and the US. We'll start off with the Obama administration, who are expected today to propose sweeping changes to the way US government oversees financial markets, and they'll push Congress to grant new powers to the Federal Reserve to oversee the economy. That's according to a draft document that has been released by the Wall Street Journal overnight. Allied to that as well, the FT reporting that Chancellor Darling, in his latest sign of regulatory crackdown, is saying that they're planning to warn banks that they'll need to improve their governance and hold more capital against any potential losses. And we've seen a couple of comments already, pretty much along the same lines from Darling on the Radio 4 interview this morning, but he is also due to speak later on this evening at 9:30 London time with Mervyn King, the BOE Governor, at their Mansion House speech. Elsewhere, a couple of US headlines to be aware of for those who weren't around in the US session. US President Obama says US unemployment will reach 10% this year. Obama said it's key to get a handle on long-term deficits and expect to see a US economic recovery shortly. He's put the healthcare costs as the biggest driver in terms of the US deficits at the moment. Similar note to that as well, Fed's Walsh said that unemployment may remain higher than in previous slumps. Another piece getting some attention is an opinion article by Bloomberg editor Matthew Lynn. He's written that the Federal Reserve officials are considering whether to use next week's policy statement to suppress any speculation that they're prepared to raise interest rates as soon as this year. And that has got some attention but hasn't been particularly market moving as yet. Of course, we'll reiterate that when the US come in later on today. And finally, to wrap up on the US side of things, Congressional Budget Office in the US revised their fiscal 2010 deficit forecast. They've upped that now to $1.43 trillion from the previous $1.379 trillion. ECB headlines, a couple of officials to be aware of late yesterday evening. Saw member Weber from Germany seeing a certain improvement in the economic situation, but suggests a bottom is nearing. And Mersch says ECB's primary goal remains price stability. Allied to that as well, we have seen ECB's Bonello hit the wires this morning. He's pointed out that nothing can be excluded and cannot say at this time whether more rate cuts in terms of interest rates are to come. Elsewhere as well on the FT, they comment on the corporate side of things. They point out that European banks' profit may be hurt by rising bad loans from corporate and consumer lending for the next 2 years. Again, that's the latest Standard & Poor's release. And on the geopolitical front, continued uncertainty, bullish moves coming out of the North Korea peninsula after the country is preparing to launch a long-range missile at a site at both its northeast and southwest bases, according to domestic press. In other news, though, the US has recommitted to defending South Korea, keeping it under the US nuclear umbrella, according to a joint statement which was released late in the US session yesterday. At the moment, in terms of FX, the dollar index is trading slightly lower as it was yesterday. We're down around 0.4% currently, and that is helping buoy some of the commodity prices. WTI crude futures were currently back above the 71 handle, up around 50 cents or so this morning. And just looking ahead then towards the calendar, one of the main things we'll be looking out for in just around 45 minutes time will be the Bank of England minutes. Again, this is for the June 3rd and 4th meeting. Most analysts not expecting too much of a surprise from this statement, where they see the MPC to have been unanimous in their decision to leave rates at 0.5%, allied to a wait-and-see approach to that $125 billion QE program that's currently in place. Other than that, we'll look ahead to the main data from